Welcome to another Cardano update. So Cardano is finally doing something and is now heading for the third wave targets that I have on the chart, which is the 200% extension right here at 39.3 cents. It looks like we have bottomed in the second wave move down right here, and we should get a third wave, like I said right here. And as you can see, we already got rejected by the 1.618 level. But that was not really bearish because, as you can see, we were overbought on the RSI, and well, now we cooled off and we are pretty much ready to go above the 1.618 and hopefully to the 200% extension to finish this third wave right here. Then after that, you can expect a short correction in the fourth wave. It should not take as long as the second wave move down right here, and after that we should get a fifth wave to the upside. And that fifth wave should get to at least the 200% extension right here at 40.7 cents. And after we get to that level, I mean, we might get higher. I don't know if we will, but we might. If we get to the 200% extension, then that will confirm that this third wave right here is in, and then we'll need a fourth and then a fifth wave. And this fifth wave should ideally go above this high right here, because if you can remember, like a month ago, we went up in 5 waves to form a first wave move to the upside right here, and then we tried going down in a second wave move, and it invalidated the first wave move to the upside, and we had to pretty much restart it. And currently we are pretty much trying to restart this whole move that we did right here. So yeah, support levels have been respected. I don't think we need this on the chart anymore, so I'm just going to take it off. And we are now left with this support level right here, which I don't think we'll need it either, but I'll keep it on the chart in case Cardano decides that it wants to go down for some reason, which would not make any sense, you know, because we are already at the third wave target, I mean almost at the third wave target. And do not forget, we just had the green line of the bull market support band go above the red line on the weekly chart, as you can see right here. And I don't know if you can remember, but I pretty much said that something was about to happen when this happened. And look at this, we had a nice pump to the upside, and now the RSI on the weekly is above the yellow line, which is a very good sign. And I think we'll get a pump very soon. Now, don't expect anything crazy. I mean, sure, the price might pump to maybe 50 or 60 cents, but I still expect the Bitcoin dominance chart to pump a bit more and get to the 60% level before we get the altcoin season, which means Bitcoin might have to still outperform Cardano for like a month or so. So if Cardano does not go up as much as Bitcoin, you'll know why. But after we get to 60%, I think that's going to be the end of this Bitcoin dominance bull run, and we'll get an altcoin season, and it will be the perfect time to go in the third wave right here on the Cardano chart. Now, let me go on the daily now, just to show you where we are at in the cycle. So I think we bottomed in the second wave right here. As you can see, we went to the oversold territory on the daily, and usually that means that the low is in. I mean, of course, we did that here as well, and here as well, and the low was not in, but here the green line of the bull market support band was still below the red line, and right now it went above it, so the low might be in. Now, it's not confirmed, but it might be in, and do not forget, we still need Bitcoin to actually do something. I mean, Bitcoin right now is going up, but it's not going up a lot, and this might be a corrective rally, which means that if Bitcoin, for some reason, decides that it wants to put in another low, it might get to 44k and test the 50% extension before we actually pump. And if that happens, then expect Cardano to get another low, of course. I mean, maybe even expect Cardano to get a new bear market low. I mean, that would not be bullish, but if Bitcoin goes to 44k, I think that will happen, and there's nothing to do about that. But if we are going up right now, and if we do go up in 5 waves right here, and we go above this high right here, we will break out of this trend line, you know, and then we'll almost be above the bull market support band, which will be very bullish. So if we get above the bull market support band, that will be a sign that the low is in. It's not going to be a confirmation that the low is in, but it's going to be a sign that the low might be in. So just to remind you where we are at, here we went up in the first wave, then this was a second wave, somewhere around here. Third wave, fourth wave, fifth wave is what we should expect next, and these 5 waves will only form a first wave, and this first wave move to the upside will only be the first wave of this first wave right here. And this first wave right here is only the first wave of this main third wave that I have on the chart. So after we do go up in a first wave up right here, then you can expect a second wave move down in an ABC, which should not take longer than the first wave in my opinion, but we'll see. And then we can expect a third wave move to the upside, which could get above the high right here at 80 cents, but I mean it might not get to that level, which is fine. And then after the third wave, we can expect a fourth wave again, and then a fifth wave, and that fifth wave will complete the first wave move right here. And this first wave move to the upside should get to at least this level right here at 81 cents, and I would like to see the first wave move to the upside get above that level, and maybe to the 0.236 extension I have on the chart, or maybe even a bit higher than that. I mean, we might as well get rejected by it, right? And then after this move right here, you can expect a second wave move down, and that second wave move down will be a bit more, let's just say, major. Well, it's not going to be that crazy, but it might go down like 30 to 40%. And then after that, we should go in this third wave right here. And in this third wave right here, I would like to see the price do what it did in the previous cycle. So as you can see in the previous cycle, the third wave of the third wave got above the 100% extension of the previous all-time high. And right now, if we want to do that, then the third wave right here should get above the 100% extension of the previous all-time high, which would put the price at about, let's say, $3.20 or something. And then after that, you can expect a fourth wave, and then this fifth wave right here of the main third wave should get to the 1.618 level, just like it did in the previous cycle. And if we do get to that level, that would put the price at $5.30. And then after that, you can expect a fourth wave move to the upside, and then a fifth wave, which might or might not happen. Now, you cannot be certain that it will happen, so you have to be careful. But if we do get a fifth wave, then it could theoretically get to the 2.618 level, maybe a bit lower so it can touch the trend line before actually going in the bear market. And the 2.618 level is at $8.45. And I expect the cycle to end somewhere in October of 2025, which means it could theoretically top at $7.83 or something to touch the trend line and almost get to the 2.618, just like we did in the previous cycle right here, as you can see. Now, we don't have to repeat what we did right here. Of course, we don't have to, because if you can remember, I was comparing the 1-2 setup that we got right here to the 1-2 setup that we have right now. Both of them started after the bear market low, as you can see, and both of them went below the 0.786 extension in the second wave move down. Now there's a difference between them. In 2020 we had a pandemic which invalidated the first wave move to the upside, and we had to restart it. And in this cycle we did not invalidate it, yet, and we are still in a second wave move down, which pretty much took the exact same time as this right here, and it even has a similar looking structure. This has a U structure, this has a U structure, and also this was a 1, 2, 3, 4, 5 setup, just like this right here. So they are very, very similar in my opinion. And if we do get a pump right now, then you can expect it to maybe look something like this right here. So this right here, as you can see, the price was not pumping a lot during that time, but you also have to keep in mind that even though it does not look like it was pumping a lot, after we got a cross right here and the green line went above the red line on the RSI, the price still went from like 3 cents to about 7 cents in like 2 months, which is still a lot. That's like 100 and something percent, which is not bad. And the price went above the bull market support band. As you can see, I think it would have stayed above the bull market support band if this right here did not happen. So maybe it's safe to say that the price would have gone higher in the previous cycle, and maybe it could have gotten to the 3.618 level, because this right here made us restart the 1-2 setup, and this was not bullish. And also, as you can see in this cycle, we almost got to the 0.236 extension in the first wave move to the upside. And if you look at what happened in the previous cycle, we were not even close to getting to the 0.236 extension in the first wave move up. Not in this first wave move up, and not in this first wave move up either. So maybe something more bullish is going on. And also do not forget, this right here was a 1, 2, 3, 4, 5 setup, which formed a first wave move to the upside. And maybe you could say that the fifth wave topped right here, and this was a ABC structure to form the second wave move down. Either way, I mean, it does not matter because it's still a 1-2 setup. And right now, if we are in a third wave move to the upside, then it could be very, very bullish, and we could get to the $8 level if that's the case, because the third wave is usually the most impulsive, which means that right here we went on a first wave move up, now we're in a second wave move down, and after Bitcoin dominance stops right here and gets to 60%, we might go in the third wave up right here, and this is going to be the third wave up of a huge third wave move to the upside. And as you know, the third wave of the third wave is usually, I mean not usually, is almost the most impulsive, which means we might even get to the 2.618 in the third wave. Now, of course, that's hopium right now, but if we do get there in the third wave, I would honestly not be surprised. Now, like I said, this is hopium, and you know, you cannot count on this to happen because we can always invalidate the first wave move to the upside. And do not forget, the invalidation zone is at 22 cents, so keep that in mind as well. And also, if we do invalidate the first wave move to the upside, we pretty much did the exact same thing in the previous cycle. So if we do get invalidated, would that be bearish if we did it in the previous cycle as well? I don't know, I'll let you decide that. But anyways, that's all I have for today. I hope you enjoyed. If you did, maybe check out our memberships on Patreon and on YouTube as well. We offer some bonus content as well as all of our trading view charts. So if you want to take a look at all of the charts, you can now do that as a member. And if you enjoyed this video, maybe like, subscribe, and I will see you in the next one.